Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Friday morning, last day of the week. And what a week we've been having here in India. 3, 4 and 6% of the Nifty Bank and the mid and small cap indices respectively. So fantastic one. We start with slightly mildly negative cues. It's a Friday as well. 2 days of holidays. Headline risk is always there. Will we take a bit of a pause is the question. I'm Prashant, with me my colleague Surabhi and Mangalam. Guys, hi, morning.
Good morning. Hi, morning Prashant, morning Mangalam. And yes, indeed, what a week it's been, right? So feeling good this Friday. And I guess the market kind of, in this week at least, even moved beyond headlines. Even on days when the US market was faltering, we were charting our own course. And I guess that would make a lot of people very hopeful. They want to believe that the worst for this market is over. And then, you can maybe get into cruise control mode again. Perhaps. What was most interesting is I was just looking at all the indices this week. None of the major indices have been in the red this week. The biggest underperformer this week is the IT index, which too is up 1.5% for the week. So, like you all said, what a week it's had. Let's hope the weekend is great enough and the next week continues, because that's the last week of this financial year.
Oh, absolutely. And, things have gotten much better, and we'll have to kind of sort of take it from there. I think we are, again, with enough caveats, etc., broadly maybe just sort of headed higher. But day on day, especially after the kind of week we've had, let's see if we are, if we give it some time to just ponder and reflect on the gains or whatever. It's, as I said, it's also going into the weekend. But just let's take it from the top. Not very much in terms of big cues at all. Equities in the US were slightly only mildly sideways. So S&P down about a quarter, Nasdaq was down about a third. Dollar index, it's been inching up about 0.5% in the last two sessions now. We're back at 103.78 on the broader dollar. Oil prices, again, have been inching up. So 2% up on Brent, and that's at about, 72 plus now. Overnight, the big sort of talking point, or of course, Accenture, right, reported numbers. And they've basically, stock ended down 7% plus. And they're talking about an increasingly uncertain macro environment. But to be sure, they're essentially talking about their exposure to the U.S. federal government, which is significant. And they're saying that it's about 16% of the U.S. business, the U.S. federal government. And, Elon Musk's Department of Government Efficiency, looking at contracts, etc. So it's just uncertain. Because of that, how much should you take away as an implication for Indian IT? I don't think that's very much. Indian IT, there may be other macro uncertainty, but this specific was an Accenture-specific issue with regards to the exposure to the U.S. government. Now, Trump announced that after the New York close that the minerals deal with Ukraine will be signed shortly. Will we see something into the weekend? We'll have to wait. And of course, later tonight, you got about $4.5 trillion of options expiring in the US. It's a big one. I remember 2 weeks back, you had a big expiry Friday, and markets did sort of react in a negative way. So we'll see. Nifty and on the just the levels here, then not very different from what we've been talking about last few days. The daily and of course and the larger time frames are coming into view now. For example, the full fall from the highs to the low, the highs from late September, October last year to the lows recently, and you're starting to wonder about whether we're going to retrace some of these numbers. So if you're able to, if you're going to retrace that, you head to 23,600. That is a 38% retracement of the full fall that we've seen. But between here, where we left off yesterday, and 23,600, which we should head to, there are two resistance levels I want to put out, which is 23,320 and then 23,497. So watch out for these two numbers. On the way down, supports stand at the 22,797 is the 40-hourly exponential average. It's been, of course, as the market has moved up, it's pulling up these hourly averages very, very sharply as well. So that's the closest there in terms of a support. Nifty Bank continues to do well. No real signs of a reversal. We ended about 0.75% higher here yesterday. The resistance comes in at the 38 and the 50% retracement of the entire fall. Again, from the late September, October highs. 50,297 the first number. 51,085 is the next resistance. we left off at about 50,060 yesterday. And support stands at, again, the 40 hourly exponential, which is 49,190 this morning. So that's it. The gift Nifty will come up on your screen. It's neither here nor there. It's about 25 points lower. There is enough buying interest. Gains have been broadening out. Broader markets have been doing well. And it's been a pretty good week so far. Surabhi.
Yeah, absolutely. I mean, no denying that it's a real feel-good factor as you get into this Friday. Of course, this piece of news on Accenture is something the market will digest. But, if you strip out Accenture's issues with the US government, which is where the negativity came in from, they've actually increased the lower end of their guidance. Instead of 4 to 7%, now their growth estimate is 5 to 7%. And there's some positive commentary on margins, etc., on Gen AI. So we'll see what the read-through for Indian IT is going to be. The other stock that was in focus yesterday, which kind of soured sentiment, was Nike. Nike, of course, is going through its own motions. It's setting its own house in order. But aside of that, it also singled out tariffs and uncertainties, currency action as a reason behind why it's expecting a double-digit drop in sales in the current quarter. Their current quarter ends in May. That stock in after-hours trading, last I checked, was down about 5% as well. So some of these issues are weighing on sentiment, so the US market was lower. By the way, Bank of England left rates unchanged as well. So it's one of those big central bank weeks where central banks have done nothing. BOJ, China, Fed and BOE, all of them have remained absolutely, on status quo. The European markets did, however, cool off yesterday. The German market was down over 1%. Now, Asia this morning, slightly mixed because these global cues are mixed. There's some selling in Chinese equities. Mainland China and Hong Kong are down. But Japan's higher, Singapore's higher. Those are some of the China and China-related markets that are trending slightly lower this morning. The talking point in terms of macros in Asia is inflation in Japan. Those numbers are still high. They've kind of, come down from January. The headline inflation number is at 3.7%. It was 4% in January. The core inflation is still at 3%, which is slightly above estimates. And therefore, the expectation of a next move from the BOJ on the upside, a rate hike, that remains intact. So that's on the macros. This week, what a splendid week we've had. So let's put the numbers out there on the screen. 3.5% on the Nifty, 4.2% on the Bank Nifty, 6.3% on the mid-cap index, small-cap index 6.5%, and individual stocks, you would know from your portfolios anyway, when it's been anything between 10, 15, 20% of gains coming through. Yesterday's day is really important because yesterday was the expiry, so perhaps we had an accentuated move playing out in terms of some of the remaining shorts perhaps also covering. And then we had solid cash market buying. Look at the numbers, and this is what I was talking about, the way the large caps moved yesterday. So we do have confirmation, over 3,200 crores of solid, hard FPI cash coming in. Domestic institutions for a change on the sell side, selling over 3,100 crores. Lots of corporate action to track as well. Lots of interesting stocks in focus. I'll leave you with a little bit of a flavor. Manappuram, there is a big deal with Bain. Bain is coming in. They are coming in with about 4,385 crores of the initial investment. Then there will be an open offer and they will become promoters of the company. We'll tell you more about this as we go along. Bajaj Finance, the mystery is finally over. Rajiv Jain will remain. In fact, he gets an elevation to the post of vice chairman. And Anup Kumar Saha is a new MD. And Hero MotoCorp is now getting into electric three-wheelers. They've acquired a stake in a small company. This company's name is Euler Motors. They spent a little over 500 crores, so that becomes another interesting piece of news to track, and we'll get you more details on it in just a bit. But Mangalam, yesterday you were telling us that, some of the shorts have been covering through the week, and I guess when look at that beautiful move we've got on the market.
That's exactly what happened, but I was very interested in what you said about Nike, because it was down about 5% overnight. What's interesting is that the Nike share price right now is back to where it was in 2020, right in the heat of the pandemic. And from there, it had seen a big rally. Things are restructuring out there. What happens to this world where they're looking at athleisure and looking at other things. I'm personally very keen on tracking that with the new leadership and what they do out there.
They should introduce a Mars line. Shoes for Mars.
Shoes for Mars, perhaps. Elon Musk will be the one who would be.
Which reminds me, was it? And correct me if I'm wrong. There's so much news flow. Didn't Mr. Besant go out and tell the world to buy Tesla?
Did he?
I think so. So, it all comes together.
The other thing was that when you spoke about the flows, there is the FTSE rebalancing today. So a lot more expected today as well, perhaps. So we'll keep an eye out on how all of this pans out. But, what's clear for sure right now is that bulls are in control. And why do I say that? Because just about 6 sessions ago, we had the Nifty, which was at closer to 22,000. Right now, we're above 23,000. So it's a 1,200-point gain that we've seen in just the last 6 sessions. So that's the ferocity with which we've seen this rally. And, be that as it may, this rally has been actually led by the FIIs. Why do I say that? One, because they reduced their cash selling on a couple of occasions in the last 6 sessions. They also bought in the cash market. And secondly, the massive short covering that took place in index futures as well. If you look at the cash buying yesterday, it was close to 3,200 crores. The DII is sold, but nothing really to worry about out here as well, because we know the kind of money that the DIIs have been pumping in. Now in index futures, yesterday as well, there was 2,900 crore worth purchase, 6,800 long contracts added, 10,500 short contracts covered. What does this mean in perspective? March 13, the FII net exposure was minus 1.84 lakh. Over the next 4-5 sessions, it's come down to minus 1.11 lakh. The FII longs have increased from 19% all the way up to 30%. So basically, the shorts in just last 5 sessions have reduced by 40%. They've nearly halved, and longs have increased from 19% to 30% itself. So that's led to this big rally that we've seen. Where do we go now? On the last 3 trading sessions, the Nifty and the Nifty Bank have both conquered the 20 and the 50-day moving average, opening the road up for the 100-day moving average. The Nifty Bank closer to the 100-day moving average than the Nifty is. So can we go past this, 50,400 mark for the Nifty Bank and 23,500 mark for the Nifty itself or not? For the next week, we have options which are fairly active. At the lower level, 23,000 is the base. At the upper level, closer to 23,550 could be some bit of supply zone after the big move that we've seen. What are we tracking all of next week? One, there is the monthly expiry that plays out. It's also the end of the financial year. So we'll get order wins. There has been an accelerated announcement of order wins as companies close their books for FY25. So that is something we'll keep an eye out on. And finally, further NAV propping on financial year end. All of last week, we saw the underperformers the last 6 months, the likes of defense, PSUs, etc., bounce back. Can they continue to bounce in the next week or not is something I'll most definitely keep an eye out on.
Okay. All right, Mangalam, thanks for that. Lots to track, so let's straight away get to it. The equity call of the morning coming in from Lawrence Belanco of CLSA. Now, he's saying that the world ex-US rally of over 17% versus the S&P 500 since the December 2024 lows is now testing resistance provided by the upper boundary of its 15-year downtrend, as well as trading 2 standard deviations above its 200 DMA. He says this resistance zone and the pending reciprocal tariff D-Day of 2nd April is a logical place to see some hesitation and likely another bout of market rotation. In Asia, he says they have a new breadth thrust by buy signals in India's Nifty index. And that's the first time he's seeing that buy signal since 2023. So that's good news for us here. Lawrence Belanco on the technicals.
Okay, well, let's just hear out Lawrence on India as well, right? So he says that yesterday's break above the 50-day moving average has been accompanied by the first breadth buy signal since 2023, he says. A breadth thrust, which is basically the broadening of the market gain. Signal fires when the percentage of Nifty stocks trading at near their 4-week highs reaches 55% or greater. He says there have been 38 breadth thrust signals since 2002. Thursday is the 39th. He adds that the average returns 30-day, 90-day and 250-day post this signal have been Nifty gains of 3.8, 7.8 and 13.4% respectively, with a hit rate of 76, 74 and about 81.5% respectively. Lawrence says one can buy ICICI Bank.
That's quite interesting, huh? Breadth thrust signal, which CLSA is tracking. That's it's indicating green tidings for us.
It's a tricky one to. It's a mouthful.
It's a difficult one to say. A breadth thrust. Wide market move going forward.
Say it slowly.
How do you calculate this?
Ask Lawrence.
No, so he said it's apparently certain percentage of Nifty stocks trading above their 4-week highs. I mean, essentially. So yeah. Anyway, I mean, lots of indicators, but I mean, you can feel it, right? I mean, the market is turned bullish. The texture, as we've been saying, is turned bullish as well, and a lot of these signals will sort of follow that and show you that. So Lawrence saying there's more coming.